The real estate market often seems like a distant world where only an elite of experts is successful. In a time of so much uncertainty in the air and bad news, realist investing can seem intimidating. But today, I want to tell you that if you make the right decision today, you can enter the real estate market from the back door. Bad credit record? No credit at all? Do you dread the idea of having a home loan? Do you dream of owning investment properties? You are in the right place and right time, because we have created a program which is a tax lien and deed investment online course of only 14 hours. This course is specially designed for people like you who have big dreams. You will learn at your own pace and everything from your home computer. This is your chance. Join our membership for $19.99 a year. What are you waiting for? Visit our website primetimehomebuyerBuyback.org and sign up today for course access.
Welcome everyone to Primetime Home Buyers as well as Secure Your Energy. Today you're here with Lady Lashley in continuation of our economic development seminars that we host live every Wednesday at 2 p.m. at the Adams Street Library in Atlanta. Shout out to Fulton County. Thank you, Adams Street, for collaborating with me and allowing me to present this in real time. All right. Also, we're live on our platforms, YouTube and Facebook. Please hit the like button. So this is week four. Week four. We are on week four of our economic development seminar hosted for the general public. This is for people who want to get an idea of how to structurize their budget, how to acquire assets, what avenues do I have, what type of associations do I need to make, and most important, what type of mindset I need to have to do this correctly, safely, and structurize it to my needs and my family needs. That's why we hope Secure Your Energy, so we can highlight those topics to get you thinking and getting you ready to invest in any market. So the first week we did assets and liabilities. The second week we did stretching every dollar, budgeting and savings tips for controlling for controlled income. As we said, we're not low income, we are controlled income, especially in this economy. Building a legacy, 7 key concepts to passing down generational wealth. And that's what we talked about last week. So it's not only about the instruments that you use to pass down generational wealth, but it's the mindset that you set into your kids as far as learning, teaching them how to budget and save at a young age, talking to them realistically about what's going on financially in your household as well as the economy. And you don't want to grow your kids up too fast, but you do want to introduce them to these subject matters before it's too late, because we that all leads to what we're passing to our kids and our legacy that we have, and that usually deals with financial assets being passed down. And we want to make sure that those assets that we pass down, that they're going to last a longevity. Does that make sense? So today we're going to move along on week four, and it is preparing to win. Here you see 5 essential skills to master before diving into the market. I didn't say the real estate market. I didn't say the stock market. I didn't say cash market. I said the market, because there is a mindset you should have. And it's very important. And the reason why I structurized this like this, because this is what we were lacking a few years ago, when a lot of people, especially in the Atlanta community, got into businesses, creating businesses and forming partnerships. And then now you look at today, you want to ask yourself, are those investment avenues still available? Are those individuals who are teaching certain content about investment? Are they still doing it? How successful was it? So now that you're looking back at that, you want to be prepared, because this is the era, as you see, 2025, where we're going to have to be very self-sufficient. Even if we wasn't prepared, we have to be prepared to be self-sufficient financially, mentally, spiritually, and socially. So today, The essential skills to master before diving into any market. One is financial literacy. We're going to highlight some concepts with that. Risk management, protecting your capital, doing the research you need, making sure you know who you are partnering with, what companies you are investing in. Three, technology and fundamental analysis. Okay. And this is how we're going to use. Okay. Discerning the market. So you want to discern the market. Um, Emotional intelligence, keeping your cool under pressure, and that's in any market. Okay. As well as we're going to get into continuous learning, adapting to ever changing landscapes, adopting a elite mindset, the key to sustainability. And one of the most important things that we're going to highlight, and that should have been number one, is continuous learning, adapting to ever changing landscape. If you're above 40, you are still adjusting. And you're going to talk about that. All right, so let's go. Thank you for being here. Please hit the like button. So these are the concepts that we're going to be talking about. Again, they're on the screen. Financial literacy, the foundations of for success. So I think I'll probably see a little bit more up here. This is the bedrock. This is the bedrock of any successful investment journey. Financial literacy or market literacy. All right. Understanding fundamental financial concepts will empower you to make informed decisions, concepts about your market. Okay. You want to go in and not only depend on the expert in whatever avenue you are invested in. Avoid common pitfalls and build a strong, solid strategy. Key areas to focus on include budgeting and cash flow management, understanding different assets classes, financial statement, key financial ratio. So, build budgeting and cash flow management. That's the first thing that I highlight, even with my students or people I consult in. What is your budget? What let's have an idea of what is the least or the most that you want to spend. How do you save? In essence of saving to save and saving for your investments. So it's very important to start budgeting, know your cash flow, what you're going to be able to invest in that particular market, be it stocks, be it bonds, whatever you want to invest. How are you going to secure that and what amount of time? And that's what we talked about, income flow versus your needs versus wants, and really getting that budgetary foundation together, because financial literacy is going to encompass that when you're going into your market of investment. Tracking your income and expenses, providing for clear pictures of your financial situation, and allowing you to identify areas of improvement. Understanding different assets classes, as we talked about stocks, bonds, real estate, commodities, and more. Each asset has its own risk and reward profile. Learning their characteristics and how they fit into the diverse portfolio is what's important. So another thing I talk to people who I consultate with or my members, it's not all about real estate. What about gold? What about investing in cash? What about investing in community endeavors? These things can yield money for you as well. Hosting community events, those type of things. So understanding the different avenues and what assets can be to you. Financial statement. You have to learn your financial statement. You have to learn how to monitor it, just like our young people do, because I've been learning to monitor the algorithm and what's good, what's not. It's the same thing you do with your budget. That's why we introduced to you the PDF ledger book that you can use, or you can use online platforms that help you look at different financial statements, ones that you can use to plug in your information to help you budget and save and invest. So learn to read and interpret balance sheets, income statements, and cash flow statements. This will help you analyze the financial health of companies you're considering investing. So we started with us. You see how I keep saying, do it for yourself, do it for yourself. Once you use these tools yourself, it'll be easy to review other companies, other whatever avenue of investment you're going to. You'll be able to look at the portfolios and the charts and understand it because you already started budgeting, saving, creating these PDFs. or financial statements that helped you understand your situation, as well as when you prepare these financial statements, they help you in the long run. Not only become organized, do your tax properly, but makes you an exceptional borrower if that's what you want to do. They love paperwork. They love to see things organized. If you have it at hand and you're about to move forward and go obtain a loan based on your assets and your financial statements, you have them because you already lived the life. Key financial ratios. Familiarize yourself with matrix like price to earning. That's with any market. Okay. Debt to equity. That's more so dealing with real estate or return on equity or return on investment. Understand these basic ratios. That's why I said this what we're going over today, you can apply it to any investment avenue because these are the things that they did not teach us in school. A lot of us did not take economics, they did not have that available to us, especially in the urban community. So these are some of the things that I love to teach myself and learn and to learn from professionals. And we just put it together for you guys so you guys can fill in the blank. All right, let's go. Please hit the like button. I appreciate you guys being here. We would love to see you guys that's on the internet come down. We'll be here for the next 6 to 7 weeks. We have another series that we will be starting, economic development strategies for leaders in the community, which is much different. We have a lot of great content for you guys. Now, your risk management, protecting your capital. We that's something we don't do. That's something we don't do. We just, pay our bills, keep a little bit to keep ourselves happy on the side. But we're gonna have to start risk management, protecting our capital. Investing inherently involves risk. Okay, so we already know any investment inherently involves risk. Master the art of managing risk effectively to protect your capital and minimize potential loss. Essential skills include, and these are risk tolerance assessment, diversification, position seizing, and stop loss order. Now, why it is important to master the art of managing risk effectively is because you want to win. So you need to know whatever avenue you're getting into, even if you're creating a business, you want to know what's the risk. Okay, I am getting into drop shipping. All right. Right now, we're having some trade wars. How would that affect the drop shipping? How would that affect my base um, amount of money being invested versus what I'm going to get? What do I have pressure? Do I have to put on my customers? Would this be a good avenue? Would this product work based on this market? So you got to take a major assessment of what you're going to do before you do. Okay. And that, even with that, mindset, as we talk, what comes to my head is business plan. Because once you start mitigating risk factors and you start looking into the market or the potential, what you can bring in, they always have market analysis. I.e. example, when I was getting started with my waist trainer business and my wellness business, I did extensive research on waist training in the market in Atlanta, what type of people like it. So and that led me into starting to figure out what market I may market to and how would I market. So just having these key concepts is going to help you with investment, business ventures, and mitigating risk factors while doing both. Okay, risk tolerance assessment. What could I afford to risk? Understanding your comfort level with risk. You are comfortable with significant fluctuations in your portfolio value? Or do you prefer a more conservative approach? I like conservative. I don't like the up and down. That's why I like gold and I like real estate. There's more conservative. I do dip and dab in some stocks, but it's very conservative. But some people can take that. That's why they get into Bitcoin. They get into cash investment, those type of things that fluctuate. It just you have to have that emotional integrity for it, and that's why we mentioned that having doing your emotional assessment too, so you can have the gut to handle what you're doing because it's not an easy process, especially if you're going to make it your primary income and you're switching from another income, which a lot of us are doing, or switching from a different type of field and we want to try this, you have to have stomach for it. So do your tolerance of risk assessment, diversification. Don't only look in one place. I'm not saying having 10 eggs in one basket, but at least probably have at least three, two or three, especially if you're transferring from one field to another field, or you're just trying something. Try it as a habit. Try it as a hobby first before you just mm, and leave one thing to go to another. Sometimes unfortunate things happen. There's been great transitions with us in the last couple of years, i.e., when it happened in COVID, where everybody did the great resignation, i.e., again, where people forced right now this year to do a great resignation. Well, you know what's going on out there. I don't think it's resignation, but now they're forced to get ready, or not even ready. They're forced to figure out what they're going to do financially. They're forced to change their career, some of them. So these are the concepts that we need to have out there so we can kind of work through this together. So diversification, don't put all your eggs in one basket, spreading your investment across different asset classes, sectors, geographical region, reduce your overall risk exposure. I say that to my tax lien and tax deed investors and foreclosure investors. Maybe it's not a good time to invest in Georgia. Maybe it's a better time to do Oregon. You're like, but Oregon got land. Maybe that's what they're looking for right now. We need agriculture. So you got to look at the times. You got to look at the political tone as well when you're going into these different markets. How is it going to fluctuate based on that? Position season, based on the market. Determine the appropriate amount to invest in each security. Avoid over allocating to any single investment, especially the high risk investment. Make sense? Stop loss orders. Okay, so stop loss orders to automatically sell a security if you fall below a certain percentage. You can usually do that on I don't think you could do it on Robinhood, but what is the platform where you can sell cash? I telling you about. Anybody know the platform you can sell cash? It's currency exchange. It's Forex. Right. And Forex and other stock exchange platforms, they allow you to have a threshold of how much will come out your account or how much you will be invested for the month. Set those stress thresholds wisely. So that's what it was saying in that particular clip. Technology and fundamental analysis. Okay. You got to discern the market. Okay. You got to pay attention to the market. There are two primary methods to analyze the potential investments. Understanding both will give you a comprehensive perspective. So fundamental analysis versus a technical analysis. Fundamental analysis. This involves evaluating the intrinsic value of a security by examining factors like a company financial performance, industry trends, and overall economic outlook. Let's break that down in regular terms. Basically, the person, the company, the product that you want to invest in, you want to look into that market. You want to look at the history of it. How good is it? How durable is it? How honest is it? Now, I'm using these different terms because we could be talking about people and companies as well. Do they have a history of a lot of broken products, defects, or drama, or not adhering to what they're selling? Now, I'm using different type of words so it can apply to different realms. But does it make sense? You want to look at that. That's a fundamental analysis. Like, what did it look like on the market? Then you get technical. That's when you're going to go into historical facts like stocks that they have it, any type of equity they have. You'll go into their website, do research into relationships, longevity. So this involves studying historical prices charts, trade values to identify patterns and predict future price movement. Learning about indicators like moving averages, okay, MACD or RSI. Now, this is more dealing with stocks, bonds, and money movement, but I want you to understand this on, uh, a regular note. It says, so you want to look at the historical price of this item right now. For instance, when I was a COVID nurse, I wanted to invest in stocks. I always said every time I walked in the room, I use gloves, hand sanitizers, use the soap up so much and lotion that I'm going to invest in the same products that stocks the hospital. Does that make sense? So, and the reason why I'm going to do that because in the time that we're in, guess what? They're using it a lot because we were in the middle of a you know what. So just that type of stuff, that's what we're talking about. Analyzing and kind of plugging in where you need to, okay? Season the moment. Season the moment. All right, so moving forward. Emotional intelligence, keeping your cool under pressure. Pressure plus spice. I know you guys be like me. I'm going through a transition in my career, my life. My kids is going to college. I'm figuring out who I am. I'm changing sectors at in my career. So you wake up with anxiety. You wake up worried, but you have to have that emotional intelligence to understand one before we get into this, so we're just going to talk a little bit to understand that feelings, emotions, pain, happy, sad, all of that is normal. It is a normal response to what's going on in your stimuli. It is up to you to determine how long and how intense you're going to be subjected to that stimuli by what you do and how you react. So we have to go through the pressure. We have to go through the pressure of the market. We have to go through the pressure of what the president chose, what our boss chose, and things like that. So having emotional intelligence and understanding that, hey, okay, this may be not what I like, but I feel this emotion, anger, or scared, or whatever. But I'm going to woosah, not react, but respond. Reset process. Feeling, react, respond. Don't react, just woosah, and then respond. That's going to be the best um, advice I can give you coming from a clinical perspective as a nurse, because that's what I tell my patients, because they're going to have to handle their disease process. Either you're going to do it or you're going to do it like, all right, let's handle this, being able to absorb more information and seeing things from other perspective and not, sometimes when you have tight the chair relationships and all types of stuff. So emotional intelligence keep your cool under pressure. Don't call your stockbroker and say, I'm drowning. It's your fault. Hey, what we could do is looking crazy. This economy looking crazy. Let's plan. What you think is going to be good? Where do you think we could shift this at? Pre-plan. Okay, before you have to get to that. All right, don't ride the roller coaster till the wheels fall off, please. That's what we are. We preventative here. Okay. Fear and greed can cloud your judgment. Fear and greed. All right. Can cloud your judgment and lead to impulsive decisions. As I told you, that is just normal. Now, greed is not a defense mechanism. That's just something that people, you know, if you're dealing with that, you're not gonna really get too far. But we're talking about the defense mechanism. Greed, you're gonna have to pray that out of your life. You gotta pray out of your life. Well, God just gonna make it poor. You're gonna realize how to deal with it. Now, cultivating emotional intelligence is crucial for staying disciplined and rational in the face of market volatility. Recognize and managing emotions. Be aware of how your emotions are influencing your investment decisions. Avoid making impulsive trades based on fear or excitement. Avoid jumping into get into this program right now, you're gonna get $1 million. Generational wealth, $1 million in 1 year. Avoid that. Do everything that we just talked about first. Evaluate, go look at the history, charts, and all that before you go jump into. So that's why recognize and manage your emotions. If you that type of person that like to just jump on stuff, get your friend, get your husband, get your kids. Like, hey, if mommy about to do this, hey, bro, I'm about to do this. Just hold me, just remind me. You may need some support. Okay, it's okay. It's embedded in us to be shoppers and buyers. Okay, we're gonna break that because we're gonna be the buyers and sellers to each other as well. But we're gonna control the market. That's why we're doing secure your energy in these economic development seminars. Okay. So patience and discipline. Stick to your investment strategy and avoid changing chasing short-term gains. Practice patience is a virtue in the market. So It is. And I learned that not only as, a healthcare provider, but also as a content creator. You try to find your niche, you try to find what you want to, like, what will work for your particular, platform. And then you're jumping, 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 and you really don't give you a chance to try stuff. So I think that's very important to just try something, stick to it. If it's not working for a second, it's okay. Just see if the consistency will get you somewhere. And that's also when you're doing stocks. You don't always want to just pull out so fast. It's good to buy low, sell high, but also sometimes you want to look at the market. For instance, things that will sell in the wintertime and you have investment in it, um, may not sell in the summertime. So Disneyland stocks may go lower in the winter and higher in the summer. I'm just throwing something out there, something that may be weather based and affect their income, that type of stuff. So you don't want to hurry up and just like, nah, I'm not doing it. I'm done. Just take your time and definitely speak to an expert. Learn from mistakes. Go back and look. It hurts. It hurts in every aspect when you make a mistake. But I've learned that, especially in the field of healthcare and preparation, preparing. The last thing is mitigation. Going back and mitigating, going back and about. I'm sorry. The last step is evaluation, and that is evaluating everything that has happened, the steps that you took, the holes, things that you could fix. And everybody got to be truthful and honest because it's not about penalization. It's actually about fixing the things just in case something again happened. And that's going to help you be prepared. So, learning from mistakes. If you did this before, go look at it like, what did I do wrong? All right, I'm never, 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 never do it. And that's with relationships, that's with dealing with work environments, that's with driving, that's with talking, that's with life. Look back at your mistakes. Don't feel bad for it because that's a part of life. Every Look at life like riding a bike. When you first got on the bike, everyone didn't know how to ride a bike. When you first went to go walk as a kid, you didn't know how to walk. Everyone falls, so everyone makes mistakes. It's just how many mistakes you're going to make and how often, and that's based on your evaluation of what happened and make a better decision. So learn from mistakes. Everyone makes mistakes. Analyze your past trade to identify areas for improvement and learning from your errors. As you know, we expand the conversation. We're not just talking about stocks and bonds. We're talking about everything. This is to apply this to life. Continuous learning, and that's what we're doing here. Is very important. Adapting to the ever-changing landscape. We did not know we were going to be in this situation. A lot of people did not know when they go to their federal jobs that they would not have jobs. These are special. These are specialties where people who have degrees spend a lot of money. They didn't know. They did not know. And through the COVID, we did not know that a lot of people were going to be home, that they needed to find another way to make money. So continue learning and adapting to the ever-changing landscape consists of analyzing the market. The market is dynamic and consistently evolving, and that's social, economic, and political. Stay ahead of the curve. Commit to continuous learning and adapting. And that's gonna happen when you open your mind and don't shut off resources. You can learn from everyone. I mean, you don't have to learn everything everyone says, but it's good to expand your horizons and learn from people outside of your immediate area, outside of your culture. I love to learn from people outside of my culture because they approach things differently. And then some cultures specialize in things. It's just in their blood. And I like, oh, you can do that. Teach me how to do that. So I love that. Stay informed, follow financial news, read market analyzation, analyze analysts. I do apologize. Read market analysts and stay up to date on economic trends. Yes, your market that you're in and the general market. Who would have thought that we trade wars would affect us so much? That is not our, general market. That's not where we will pay attention to a lot. You didn't think how much it would trickle down and affect us. So seek mentorship, learn from experienced investors or financial advisors. Their insight can and guidance can be invaluable. And that's why I'm sharing it because after 5 years of investing and going through the up and down, as well as learning about what I did not know and knowing that I'm safer and applying those skills to, my investments and other people's investments. This is why you want to seek mentorship, especially when they have it for free. Hit the like button. Embrace new technologies, explore new tools and technologies that can help you analyze data, automated trades, and improve your decision making. Now, this is something that I want to talk about because this hit me hard this morning. Okay? Now, as a person that's marketing, learning how to market better for my platform, for my business, it's like you got to keep up with the trend. I'm over 40. We like PowerPoint. We like this type of stuff. We were in school, we had those projectiles that you put the clear paper on, and we learned like that. Audio books a little bit, going to the library. It was very old school compared to now. So there is a gray area now, me in my 40s, that has to learn more about these platforms that will help my business. And that's what you guys have to know. It's hard. I'm gonna tell you, it's hard out here for us. I was talking to someone very close to me, and a couple of days ago, I couldn't understand where she was coming from when she kept saying, "I don't want to keep doing this." I'm like, "Girl, you are an older lady. What do you mean?" But when you think about it, we have learned so many new things, where new technology advancement, it can become hard for us to continue learning and wanting to learn. So the best thing I can say to stay up on date is collaborate with the youth. Collaborate with the youth. Yes. I know we can go and do some program, learn about AI, but it's nothing like the youth. They have it. So take your time, ask them questions. If they know it, they're willing to teach. And don't feel like, I'm telling you, that's something I learned today. Because it came over me and I was like, oh, I don't want to learn about this. He's teaching me, and I'm like, okay, now I understand how it feels to be on the next chapter of your life and having to adapt to a whole nother genre. Paper and pen is my friend. Now, so I just wanted to share that with you guys so you can understand what we're all going through this transition ourselves. So to adapt an elite mindset to Did it? Get adapt an elite mindset to hold on. Let me make sure that it. Okay, I think it did skip. Said, wait a minute, I know something happened. Continue learning, adapting to ever changing landscape. They was like, she was talking too much about that. Okay, so the market is dynamic and consistently evolving. To stay ahead of the curve, commit to continuous learning and adapting. Stay informed, follow financial news as we talked about, seeking mentorship, embrace new technology. And then I did skip to the next one. I just went into detail. That was in my heart, y'all. We be tired of learning more stuff, but we gotta do it. We just have to do it. Adopt an elite mindset. This is what we're doing here in Secure Your Energy session. We are adapting an elite mindset. The key to sustainability, to sustainable success. Beyond this tangible skill, cultivating an elite mindset is paramount. This includes setting clear goals, taking responsibility, maintaining a long term perspective. Just don't switch up, staying disciplined, sticking to it, embracing challenge. So setting clear goals. Define your investment goals, your business goals, your saving goals, whatever it is, your objective, and create a plan to achieve this. While you're doing that, you're creating a business plan or a life plan or a portfolio for whatever you're doing. Take responsibility. Own your investment decisions and learn from your mistakes. You did it, it happens. Don't blame nobody else. If you blame somebody else, you're going to not learn what was the mistake. Even if it was somebody else's fault, even if your man cheated on you, whatever it is, I'm just throwing it out there. You won't be cheated on you. Just find a way that you can learn and build from it. Okay, I'm not going to approach this way because this gave him room to do this. Maybe I didn't satisfy him in this way. Maybe I didn't take this approach. But you don't go badger yourself about it. You don't take them back. Bad is bad. But you want to find where you can reframe yourself in every situation, taking responsibility, maintaining a long term perspective. Now we're going to look forward to the future. We're not going to look for instant gratification and no investment avenues, business ventures, because that may not yield you what you need. There are a lot of people, as we mentioned, that started in COVID that are not here with their elite learning programs, things. So they were crash courses. They didn't take the time to really put that work in there to make sure that their students were going to leave and be successful. It was literally a short term plan, and now long term, nobody trusts. And that's even with your business. You don't want that. Have a long term plan. How you're going to evolve 6 months, 1 year. It doesn't have to be 5 years. Start with little increments. Start with little goals and move forward and crush it. Stay disciplined. Stick to your investment strategy. Avoid an impulsive decision. Investment strategy, market strategy, saving strategy. Discipline, discipline, discipline. Have an accountability partner on different levels of your life. I say keep assets around you. If you have liabilities, you'll have to leave those liabilities alone. What do I mean? People who bring you down, don't support you, cause drama, take money from you. That is all liabilities. You want to have a good surrounding around you, because the days you're gonna be really feeling weak, because this is a whole nother genre. You're learning, trying something new. It's scary. So you want to have that spiritual support, maybe your pastor, maybe your husband. You want to have that financial support, maybe someone who does mentorship or your lawyer, whoever. But you want to have somebody who can give you a clarity in the situation so you don't be overwhelmed and you keep that emotional integrity and stay disciplined. All right. Embrace the challenge, view the market volatility as an opportunity to learn and grow. Nothing's going to stay the same, nothing's going to stay perfect. Plan for it not to work. Plan for not to say, because they say when you do that, you plan for the worst, it brings it. No, but you still have to be pessimistic in many terms for a rainy day. Because, like I said, people went to work, federal jobs, the day the COVID thing just stopped one day out of the blue. Who would have thought? All right. And we get to the last part of this, the conclusion. Okay. Now, concluding, investing in yourself is first. Like I say, pay yourself first, pay your bills first. That's your need. And when I talk about assets versus liability, put yourself first. Not being selfish, but definitely, as I say, when you're building a relationship with these investment avenues, people who do them, people who specialize, put yourself first. Don't always bow down to just their needs. Make sure that it's an even Steven, that you're actually getting value for value in the situation, be it an online course. Then you go there and you still confused. Was it value for value? You want to look at the reviews. You want to talk to the educator. Same thing with the lawyer. Same thing with a realtor. Same thing with whatever platform you use to market. Same thing with whatever platform you use to invest. You want to do your due diligence. You want to take your time and really figure out what you're dealing with so you can make that right connection so you can make it an asset. Okay? We're trying to have more assets and less liability. Assets ain't always a house, it's not always $1 million. Your people, your family, the things you do, the way you think is an asset. All right. So investing in the market can be rewarding experience, but it is crucial to approach it with the right skills and mindset. By mastering financial literacy, risk management, analyze techniques, and you want to know how to analyze emotional intelligence and continuous learning. You'll significantly increase your chances of success and protecting your hard earned capital. Remember, the best investment you can make is in yourself. Equip yourself with knowledge and skills needed to navigate the market with confidence and prepare to win. Last thing I will say, I was always taught by my family coming from the tribe of Levi, they cannot take anything from they can no, it's they can take anything from you physically, but they can't take what you know in your mind. You can physically lose your home, you can lose your husband, you can lose a relative, you can lose, but if your mind is strong, if you can come up with ideas to get you back on your feet financially, spiritually, socially, You're going to be able to move anywhere in the world because your asset is in your mind. So I want to say thank you for being with me today. That's all we have to share with you this seminar. Next week, we will be moving into next week, Wednesday at 2 p.m. Adams Street Library in Atlanta. Cameraman, get ready to stop. Sorry, y'all. I'm prompting my cameraman. Next week, we will be going into creating leverage through asset acquisition, the power of owning your future. So we're going to go into the ones that things that can create leverage for you in our market, ways of thinking about what can create leverage, because what can create leverage today may not create leverage tomorrow. All right. It's a mindset. Thank you for being here with us for our economic development seminar, and we'll see you next week.